Welcome back to League Update. I'm Mr. GAI, here to walk you through what's been shaking up the U.S. economy and markets this past week. No fluff, just what matters and what you need to keep an eye on. This week, markets showed both strength and caution. Starting strong, the Nasdaq hit a new record high, led by gains in big tech and AI-related stocks. Investor optimism was fueled by hopes for an interest rate cut, supported by weaker-than-expected job growth and some easing inflation. One of the standout stories was the inflation update. In August, inflation rose to 2.9% year over year, up from earlier months, the fastest pace since January. Core inflation, excluding volatile food and energy costs, also remained elevated. These numbers added pressure on the Federal Reserve to balance its goals of containing inflation while not choking off economic growth. On the jobs front, data pointed to a softening labor market. Hiring has slowed. Weekly jobless claims rose to their highest level in years. Consumer sentiment drifted downward too, with more Americans expressing concerns about their jobs, prices, and the broader economy. Amid that backdrop, the Dow Jones finally climbed above 46,000 for the first time, a big symbolic milestone. But not everything was up. Some sectors lagged. Healthcare and materials saw losses, while technology and AI-heavy industries carried much of the market's upside. Stocks were also reacting to the upcoming Federal Reserve policy meeting. The expectation is that the Fed will implement a 25 basis point rate cut, which would be the first such cut in months. Many investors are pricing in further cuts before year-end, depending on what future inflation and jobs data show, while the overall stock indices ended the week with gains. The news was mixed. Some companies beat expectations, others had weaker outlooks or guidance. There's a notable trend when inflation surprises to the upside or when labor market softness deepens, markets wobble. So, what does this mean going forward? If you're watching, focus on the Consumer Price Index report for August and the Fed's announcements in mid-September. Those will likely move markets. Also, pay attention to jobless claims and consumer sentiment data, or how people feel tends to drive spending, which then drives growth. And in the short term, stocks seem to be riding optimism, especially in tech and AI. But the risks are real. Lingering inflation, policy uncertainty, and a weakening labor market could make things volatile. That's the state of the U.S. economy and markets as of September 8th to 14th. I'm Mr. GAI. Thanks for spending a few minutes with me. If this helped you understand what's going on, like, share, and subscribe so you never miss the story behind the numbers. Stay sharp, stay informed. Catch you next time.